Hey, what's going on, everybody? Happy Thursday. It's about 12:30 p.m. I wanted to do a quick video update because clearly Zoom is sucking right now. I did a video earlier on this morning at 6 a.m. and they said they were having issues with their cloud recording. So I'm just going to do another midday update for y'all. And again, folks, yesterday in the advantage side, I told you guys, right, that if we started seeing prices close under this Monday low right here, okay, so where is this? This marker right here, okay, 7630.5, this would be a shorting opportunity. Now, unfortunately, all this stuff happened when I was asleep overnight, but luckily the Advantage members caught the short trade and rode this down into the 6 and 5,000s, okay? Now, again, if you've been listening to my videos, watching my videos, following my analysis for a while, I've told you guys that for the most part, it would have been much wiser for you to start considering a short bias all the way from over here. Okay, this is where we started having our short bias. Can't definitively say that, I had a short bias here or here, but I know for sure that this is where we started leaning short, okay? So the point is we hit a key area, all right? Key area being this marker right here. So let's do this, okay? If we look at Bitstamp right there, and we throw on the 200 weekly moving average, all right? Right there, we hit a key support area that has been holding up Bitcoin since 2014 and 15 right there, right? So we hit it in 2015, we hit it in 2018 right there, and now we're hitting it again in 2020, this 200 weekly moving average, okay? And that is currently around, as you can see, $5,507, all right? Now, what does that mean and where do we go from here? Well, for the most part, as you guys very well know, the S&P 500, which is one of the US indices, has been getting absolutely slaughtered over the last 2 or 3 weeks. And if you've been watching our videos, okay, these are the videos that we do on a weekly basis for our Advantage members and free members on YouTube. We do an equities update every Sunday. We've been talking about this market, especially on this little waterfall right here. When we started seeing this breakdown, we expected more downside all the way to this purple box, okay? Once this purple box started breaking, we talked about more downside to this next box, all right? This next support system. Okay, so after this support has already broken, as we can very well see, today is the first day where we see a massive, massive action as per the Fed. They are unleashing a $4 trillion repo bailout. Okay, now you're probably thinking, oh my God, this is great. This is great for the economy and now we're getting bailouts. No, it's not. This is, this is the banks reaching their height, their limit, their capacity of being able to sustain the pain. And if they don't get these bailouts from the government, which are basically free handouts, okay, that's nothing more than what they are. They're literally handouts, okay, to these small banks, which are on the brink of collapse and failure, all right, they will start cascading that into larger banks and other parts of the economy. So the Fed literally has to come out, save the day by pumping and printing free money into the market, not even solving any of the underlying issues. Okay, so this bailout is why you see over the last hour or so this little spike. But even that little spike, look at that, it was so short-lived, got sold off real quick. Now we might go a little bit higher. I bet you we're going to smash into previous days resistance right there around maybe 2850, maybe this area right here around 2700. But I really don't expect much higher movement. Okay, maybe we might go as high as 3030, but even then, I still think that the structural issues in the economy, in the world, are really starting to set in, okay? This might, in my opinion, just be the beginning of a big disaster that we're about to start seeing, all right? Now, we talked about the, let me see, what was it? The coronavirus, right? So we talked about the coronavirus and the trade war that happened in 2018, right? Trade war, dumped the market about 20% or so, okay? Now, we hit a low of almost 26% from the high due to the coronavirus. Now, if you know me, and you've been watching me for a while, you know very well that I don't believe coronavirus is the only thing that's dumping this market. I think there are serious issues underlying in the economies around the world, especially liquidity issues and the overextension of these markets that is essentially holding up the floor barely from things just falling apart. Okay, now I'm gonna give you guys a personal anecdote of what my parents just told me just a few hours ago. They called Fidelity, where they have their money, for their retirement fund and their, personal individual brokerage accounts, and they tried to essentially close out the market and go in bonds or cash. And Fidelity themselves basically tried to talk my parents out of it and saying that this is probably not a good idea for you to do so, or it might take a few days or whatever, right? These are the examples that you will hear from 2008, 2009 recession, where people tried to do their best to get their money out, but these banks, institutions were so scared that they would just not be able to have enough liquidity to allow people to be able to cash out of their 401ks, their brokerage accounts, etc. Okay, this is what scares me. When people like my parents and maybe even yours are looking at the retirement accounts and just seeing that get drained, and when they start to try to close out their accounts, right, or close out their positions, then you see someone like Fidelity basically trying to talk them out of it. Okay, now what does that mean for crypto? Well, like I've said many times before, I don't think Bitcoin or crypto is anything special or going to be immune when we see a recessive environment or when we see systemic risk all around the traditional markets, which we're already seeing, as you can very well see, as per these markets, right? The way they're sliding. You can see Bitcoin is down almost 50%, 50% from this high that we just put in 3 or 4 weeks ago, okay? Well, I guess it's right now only down 41%, but it was down almost 46, 47% just earlier on in the morning, right? So right now we're just seeing a slight relief in price. We're seeing if prices can, essentially hold up, maybe even push back up a little bit. But for the most part, folks, there is still underlying risk in this market, okay? And again, though I can't give you financial advice, I could tell you that I am personally sitting in cash since middle of February, okay? And then I pretty much got out of the market completely beginning of March, okay? So the point is that if you really think that the coronavirus, the way the economy is looking, in terms of how it's overextended and how even assets like gold, right here, you could see are being heavily sold off into key support levels, right? You would think that gold itself would maybe at least hold up, right? But the reason it's selling off is because either it's getting margin called, or either equities are getting margin called, and institutions have to borrow money by closing positions in gold, moving that to equities to save their positions, or even gold itself is being sold off because all people want to do is stay in cash because they're really scared of what's happening in the overall environment, in the economy, maybe even the underlying structural issues that may be happening in the stock market, liquidity issues that they may be having. So you can see there's a lot of different reasons, in my opinion, why you see major assets across the board starting to get sold off. Okay, especially things like gold and the S&P 500 dropping so much, and even Bitcoin. It's all related, folks. It's all related. Okay, and so what you're really seeing right now is the system as a whole trying to do its best to repair itself. Okay, but even then, right, even with this kind of news, I mean, on a typical, you know, day or month, if something like this kind of comes up, you would see a massive, bullish engulfing candle on the 1 hour or the 4 hour chart. But look at this. I mean, we had a 15-minute candle and then this thing got sold off again. So what does that tell you? It means there are still people in the market who do not believe that even this kind of injection that the Fed is putting in will be enough, at least not right now, okay? So we have to be careful whether you're in crypto or Bitcoin. Now, in our community, I told my fellow members that yesterday, like I said, if there's any position that you should be in, either you want to be on the sidelines or you want to start looking for shorts right when this breaks, okay? So if you went short with our Advantage members, you were sitting on basically a $2,000 down move, all right? Now I can confidently say that I did the recording of a video like that. I put it in my Advantage analysis. I put it in my trade setups. I told everybody that we should be looking for more downside, okay? Now, I know there's more people out there who've been talking about, hey, I still think, Bitcoin can recover. We're probably going to go back, for halving and start going to 15K, 20K. That's a bunch of bullcrap, okay? The halving doesn't mean shit when the overall system and economic uncertainty is out there, all right? That's the real deal of what's happening around the world, all right? People don't want to carry high risk assets like Bitcoin when the world itself is so uncertainty, when the world itself is showing so much uncertainty about traditional assets. Okay, if people want to be in cash, they don't care if Bitcoin is ever going to go up to 100K. They'll go in cash. Okay, but what happens right now in environments like this, folks, is that so many people are trying to get out of their positions, whether it's institutions, whether it's retailers, and this applies to the same example of my parents that I just gave you, right? My parents, I told you, said that they were unable to essentially get out of their positions, and Fidelity basically talked them out of it. I'm sure there's going to be many examples like that that you'll hear over the next few days or few weeks, okay? And because there's so much of a liquidity issue, that kind of tells me that there is probably much more underlying risk in the market than we can even imagine right now, okay? So what I would urge you guys to do, I guess other than talking to your financial advisor, is wait, okay? Before you start getting into longs and start FOMOing at the fact that, oh, Bitcoin is at this price, or gold is at this price, it's so low, be careful. Let the market bottom out, let it show you strength, and then consider getting back in. Do not just willy-nilly jump into this, because folks, we just had a full retrace right here of the move from December 2019, okay? This is not healthy, all right? All we've really done since June 2019 is we've created lower highs right there, and then lows, lower lows, lower lows, lower lows, okay? Definition of a bear market and a bear trend, all right? Nothing more to it. Anyone who's telling you that they should be expecting anything higher than, say, 6,000 or 7,000 anytime soon is just lying to you. They don't give a crap about you. They're just trying to get paid and get your views in terms of their YouTube videos or whatever, okay? I'm at least trying to tell you the real deal of what's happening in this market because I've been trading it on a day-to-day basis. I told you guys I trade for a living. I told you guys Fassel over here in the equities announcements trades for a living. We give you the real advice of what is happening in the market on a day-to-day basis, all right? And I really don't think that the effects of the coronavirus, the effects of how the economy is really struggling around the world is really factored into price, okay? I still potentially think there's more downside to go. And like I said before, the other area where we could potentially land is another from here down, right? So from here down, that's another 6 to 8%, okay? So if the S&P 500 could go another 6 to 7%, right? I bet you that Bitcoin can also go lower, and the lower targets from here, all right, are at least 10 to 15% away. So I would probably say we're right here. We'll probably go right there around $4,800 or so, which was this previous consolidation block, all right? And I can show you guys as per this chart right here, okay? Let me see here. This is the weekly chart that I showed my Advantage members before. This would mean that at this particular point right over here, okay, this was the weekly consolidation in April 2019 that we had before that big push up. And then over here, we reaccumulated in November, December 2019, and then pushed back up. And now we're looking for key weekly support levels. And that's potentially 53 to 5,000. And with a wick low of about $4,900, that's possible, or all the way down to about these levels right here, where we bottomed out in December 2018. So the interesting thing about this is in December 2018, the S&P 500 hit about 2350, okay? Bitcoin around December 2018 was over here, right? Around $3,100, $3,200. So I don't see why Bitcoin cannot drop to those levels as well if the S&P 500 goes down further, okay? That's kind of my thought process. If the S&P 500 so far has dropped about 25, 24%, or actually 26%, and Bitcoin has dropped about 47, 48%, that means Bitcoin is dropping at almost double the rate of where the S&P index is dropping. That means we can at least assume that if the S&P 500 has about 7 to 8% left to its key support in 2018, that means Bitcoin from here down should drop at least double that. So let's just say 15%. That puts us around $5,000. Okay, so that's kind of my thought process right now. I still expect Bitcoin to keep dropping, especially if the S&P 500 does not stop. Okay, and to be honest, I really think that it's going to take a little while for prices to recover, whether it's in the stock market or whether it's in Bitcoin. Okay. So again, folks, if you are not part of the Advantage community, do come join. We put out every morning analysis like this, so you can read about the stock market. You could read about what's happening in crypto. I do daily morning video updates. I provide updates in my Bitcoin analysis channel, and then we've been shorting in terms of our leverage trades right here. I also put out trade setups in terms of spot buy positions. Okay, so tons of information, tons of content that you will get to see on a day-to-day basis. All right, that's it, folks. I hope you guys enjoy this content, and yeah, come join Cryptosomniac, and I'll catch up with y'all soon. All right, cheers.